Thank you very much for joining us today. It's an absolute pleasure to have you. Thank you to everybody that's joining us. It's a real pleasure to have Khalfan joining us today on the webinar. This will be one of the last that we do leading up to the Eid break. And just as a very quick introduction, although Khalfan doesn't need an introduction, His Excellency is the CEO of the Dubai Future Foundation, which literally sits at the heart of Dubai's startup ecosystem. And he's also the chair of the Dubai Future Council for Entrepreneurship and Innovation, which are really leading the way in trying to drive strategy, policy, and initiatives to support startups based here in Dubai and the wider UAE ecosystem. And of course, in full transparency, he very kindly asked me to join the committee, where I hope I've been able to provide some data, information from MAGNiTT, but also a startup founder's perspective. So thank you very much, Khalfan, for joining. I'm trying. Thank you very much for joining us today, and I really appreciate it. I mean, to start with, 5 or 6 weeks ago, I was hoping to have you join, and I'm happier to have you join now because there's so much more to talk about. But one of the things I have to really credit you with was, as the crisis was happening, you took immediate action. We had a meeting of the whole of the committee to kind of discuss things, and we embraced the idea of having to try and address and identify what the biggest challenges were for startups and founders here. So I very much commend you in doing that. Just very simple question to start off with. How are you doing? How's it going working remotely? How's DFF working remotely? How's this whole kind of change in work path been treating you?
First of all, thank you very much, Philip. I'm noting this question first because before that, I'd like to welcome everyone, and I'm honored to be in this exciting conversation. I'd like to also thank you for inviting me, Philip, and maybe this is a nice chance for me to tell everyone how I actually met you for the first time. And I remember back in the days when I was working with Dubai Holding, we were playing around with the idea of developing a double bottom line strategy venture capital fund to support the ecosystem. And it was an interesting exercise that we were working with. And during that effort, I remember I was looking at the reports left and right, and I just came across this MAGNiTT report on my desk. Don't ask me how I got it and who gave it to me. I really don't remember. And I looked at it, very visually appealing report with interesting numbers on the region, specifically focused. And I didn't think I came across a report that was focused yet appealing to read at that time. And I simply took that report, and I remember sticking it on my wall in the desk and looking at it every once in a while whenever I wanted to have access to those things, numbers. Days pass by, I go to a conference, and I meet this gentleman, Philip, and he says, "I'm Philip, the founder of MAGNiTT." I was like, "MAGNiTT?" He's like, and then I just went to my, I remember going to my office and taking a picture of that report and sending it to you. I hope you still have that picture.
I still have the picture. I still have the picture, and it's one of my fond memories.
Great, and I think this is how we met. We had amazing conversations, and this led to more dialogues. Obviously, I then moved to Dubai Future Foundation. The fund discussion is obviously evolving to maybe one of the points that we will discuss today. But Philip has kindly been part of the conversation in many ways and forms, specifically through the Dubai Future Councils and the council focusing on entrepreneurship and innovation ecosystem, a main driver with feedback in that council. So I can't thank you enough for your ideas.
And I try not to be too tough.
Yes, you try not to, but you are sometimes. But that's fine, because we need to be tough, especially in tough times. So I mean, we thank you for your efforts. If you going back to your point and question about change, obviously a lot of change in many ways important. If we start by work from home, I always say it has its pros and cons. The pros is obviously you spend more time with your family. You have those small breaks where you get to see your family. As small as they are, they're still effective. But at the same time, you really are sitting in one place. As long as you are fortunate enough to have that space of a quiet space with no disturbance while you're working, then that's good. But meetings tend to happen one after the other. And there's also the beauty of multitasking when you do that, whether you're listening to a webinar. So for us, maybe me and you now are more interactive, but for the listeners, someone can be cooking and someone can be on a treadmill like the one I have here in the back.
Yeah, I told you yesterday.
So,
I hope you're staying in shape.
So I think the multitasking thing is very, very efficient when it comes to, and obviously the technology is helping, and we have a great infrastructure, alhamdulillah, here in the UAE. But obviously there's one angle that everyone's talking about, which is the level, and I keep on stressing it in the sessions that I have, which is the level of creativity that can be lost through work from home, through the random shoulder rubbing interactions that happen through physical environments, which I think is a big discussion point. Those random meetings that happen whenever we're in the building, or we grab coffee and have random discussions with people, end up being very impactful when it comes to the creativity of a business. And this is kind of lost in a way and form whenever you're on a work from home strategy. But again, there are solutions of Zoom community gatherings and Zoom or other solutions, obviously, that can make sense. But I don't think they can replace the physical interaction and the discussions that. So this is one way of it. But in a nutshell, we're blessed. We have the platform, we have the infrastructure and the connectivity, and things are going smooth, specifically at the Dubai Future Foundation.
Awesome, and thank you very much for unblocking voice over IP. It's made a big difference, especially during this period.
Yes.
Look,
and I'm sure to that point, I'm sure this will be a dialogue going forward, and I'm sure, like we've said, and maybe COVID-19 has so many negatives out of it, but there's always a silver lining, and I think it's always good to discuss what things it has accelerated from a positive point of view, and this dialogue can be potentially a discussion that leadership is looking at.
Absolutely. Look, just a caveat for everybody on the call, the ways this will be, I'll do a 20-minute conversation back and forth with Khalfan and then open it up to questions. So if you have questions, please share them in the group. One thing he specifically stressed, because we won't be able to address all questions, but he's very keen to hear your concerns and challenges that you are facing. So if there are specific things that you would like to highlight rather than questions on issues that you have, please put them in the chat box. We'll be saving this as part of a Zoom exercise, and then we will be sharing that with Khalfan and the DFF team as they continue to kind of develop their theses and policies for startups. Khalfan, a couple of weeks ago, as part of the discussion that we were having, it was clear that there are issues for many startups, not just startups, SMEs at large, but one of the points that I kept stressing is that startups are very different to offline SMEs, and we have different needs and requirements. And one of the sad things is that over so many years, a vibrant ecosystem was beginning to develop in the UAE, with nearly 60% of all funding last year allocated to UAE-based startups. And this challenge has really created a little bit of a difficult environment for those companies. You specifically released a white paper that came out earlier this month. What were some of the key high-level findings that you saw from the report that was published, that people should be aware that you already know, that came out of the white paper?
So I think the white paper, obviously, thanks again for all the input in that, clearly made our recommendations at the government level more streamlined and structured. It's based on key recommendations, and I hope that everyone had seen this report, especially people attending. If not, please, they're available on our website, and you can have access to all our future topics and COVID-19 reports. But specifically to this one, the purpose of having this exercise is to aggregate all the recommendations and the efforts. We're in a tough time right now globally, where everyone's trying to find the most innovative solutions and for startups. And obviously, in every country right now, the top priority is the health of its people, and maybe number two, the health of its economy. And that's the balance. And maybe in some countries it's vice versa, but those are the top let's say topics that people are discussing. When it comes to the report, as you've mentioned, there are mechanisms of financing that have been discussed, Philip, and you're aware of that. How can the government and different lending or equity financing mechanism can support the ecosystem. We all know what startups are going through in those tough times. And specifically, like you've mentioned, Philip, we're not talking about the typical SMEs, which obviously are struggling as well, but we're also talking about the fourth industrial revolution, tech-driven innovations that are even most probably at even a riskier situation in those times. Reason being, they have less tangible assets and their ideas are disruptive and with high growth rate and high burn rates at the moment. So and those startups are definitely at risk globally. So the idea of the report is to discuss what kind of funding mechanisms are there in the ecosystem to assess or support the ecosystem. So that's one. Obviously, the telecommunication and the infrastructure, the reduction of fees and the burdens on startups. So different points have been discussed, and now we're in a phase where we're assessing all those recommendations. I mean, the good thing is that this recommendation or this report had came out very recently, probably what, 10 days now, maybe, Philip?
Yeah.
So so we're in a situation where we're digesting all those recommendations right now, aggregating all the contributors towards those efforts. You see stimulus packages coming in left and right. You see funding mechanisms, whether it's Mohammed bin Rashid Innovation Fund, whether it's through the SME, and you see different service providers and people also offering reductions in rents and in fees. But the idea is right now, how can we consolidate all those efforts and see where do they fall and do they really reach the tangible, let's say, stage or level where the startups can actually feel it and appreciate it. Because this is, I think, the biggest issue, Philip. If you look at the United States at the moment, they're in their fourth phase of stimulus programs right now. And till today, with the trillions that they've been deploying, you talk to companies and startups that haven't seen any of that. So I think it's extremely important to ensure that the community gives us the feedback on what is tangible and what isn't. And this is why I kindly requested that in this discussion, Philip, that this becomes an interactive session more, because we want to voice out what we're doing, but we want to continuously listen, because we will always learn, and we learn from the people that are on the ground of what are things that they're feeling, or what are things that need to be changed. And lastly, to this point, is all I can say is that we're blessed in a country where agility and change and acceptance from leadership is there. They listen to us on almost a daily basis on what are the key challenges. And I'd love for this session today to seriously have an impact, like the report is being seriously taken now, and I'm personally monitoring its recommendations on a regular basis. I would love that any contributions here really come out to be next steps of really resolving major challenges.
So, I mean, from the white paper that was published, I mean, there were some broad areas, and to be honest, to date, we've yet to see anything concrete for startups. I know there was the central bank fund that came out with an initiative and a stimulus package. I mean, I can speak from my first-hand experience. Like you said, my bank manager at Emirates MBD didn't even know what the policies were, and he was unable to assist me. And in fact, many of them were focused on loans, which many startups don't take. When it comes to startups, as I highlighted in the committee, many of us are in a situation where we're looking at talent. Ultimately, Sharif Al-Badawi, when we did our first webinar in this crisis, said that talent and people are the most important thing. And given that many high-growth startups are currently going through an exercise of cutting costs, reducing burn rates, trying to manage through talent, which takes up about 70 to 80% of costs, is one of the key drivers. Are you aware of, or can you share any information on any initiatives that are being put into practice that can support startups in managing the cost of staff, or at least the process of maintaining, furloughing, and keeping them in employment, or even taking it a step further, supporting them in moving to other companies without the costs of visas, transfers, and etc. So when it comes to talent, is there anything that you can shed light on with regards to support for startups?
Yes, I mean, first of all, I mean, to this point and to one of the recommendations that you mentioned in the report, and to the comment that you mentioned related to the bank, if you look at our report, there's one recommendation that says we need a startup champ in this area. And I think this can be executed immediately. And I've spoken to the team to really have the Dubai Future Foundation as the focal point, at least for the current situation, to ensure that everything that's related to those challenges is funneled to us, and then we can push those ideas to the relevant parties, and we can have a continuous dialogue. So I think it's very important for us to, in order for us not to get those fragmented offerings, to really ensure that there's a place where startups can actually connect with and understand and look at all the complete offerings that are there, whether it's being what happens to talent, what happens to from a funding perspective, where are we with fees, where are we with rent. Now, with regards to talent, no one can deny, Philip, that without talent, nothing of this will work. The idea can be great, but you'd rather work with an A person and a B product than vice versa, because it's all about the talent and it's all about the entrepreneur. And I think the first way to keep the talent and retain the talent is to maintain or give them hope in the idea that in the idea that they're driving. So my first let's say hope is that the entrepreneur that's driving an idea continues with it until he sees light at the end of the tunnel. I like what you've mentioned, to find other jobs if things if they're in struggling situations, but I'd rather first ensure that they have the right funding, the right support, the right, let's say, a mechanism for them to thrive in the business that they've been running as an entrepreneur. So how can we help with that first? And then as an option B, what can we do with the talent that decides otherwise? So if we start with option one, I think even, and I'm maybe jumping into the Dubai Future Districts initiative, which I'm sure many of the attendees, I hope, have heard of. It was a $1 billion dirham fund that had been announced pre-COVID with the same double bottom line developmental angle to boosting the ecosystem. And it's not only return driven, it focuses on investing in startups in the ecosystem. It also invests in anchoring regional funds. It also has an angle in looking at global funds with an eye on the region. And where we invest in startups in the region, we look at where is the gap in the market. Where are the traditional VCs? Where are they at? Where is their appetite? Where do they see a gap? Let's say, for example, they realize that the angel round is the gap, or Series A is the gap. We come in there and we fill the gap to ensure that the startups come in out of that.
And on this, I mean, so if we talk about the Dubai, the fund, has that been deployed? Is that planning to get deployed? What are the plans for that? And is venture debt part of that discussion? Because there's a lot of conversation now that it's an opportune time to start bringing venture debt as a mechanism and as a tool to support startups, specifically high growth tech startups, that can complement that with a potential fundraise. Where are we in the kind of fund status?
Okay, so I'll answer the venture debt as a second question. Where are we with the fund? As everyone knows, the fund was announced earlier this year in the presence of His Highness Sheikh Mohammed through the Dubai Future Council. It had been approved. The three contributors to this fund through the Dubai Future District program, which offers 10 other initiatives, are the Dubai World Trade Center, the Dubai International Financial Center, and the Dubai Future Foundation. And the idea for this fund is to, like I said, contribute into those different buckets. The governance of this fund is in place. The steering committee and the investment committee and the leadership for this fund is obviously being built at the same time. I'm talking about the executive management team, but the governance and high-level oversight is there. The asset allocation strategy is I would say 95% there, and is based on the buckets that I have mentioned. It's just percentage allocation on what goes where when it comes to let's say, matching schemes versus co-investments versus the fund of fund versus direct and indirect. What is the actual process or stage that we look into? So all that is in very good shape. Now, where we are with it is, due to what has happened at the moment, you can look at it in a way that we have put the COVID-19 hat like any other entity or government entity has done, and we're looking at it in a way as whether we have a role to potentially explore playing around with the mandate to have it a bit more COVID-19 driven. Obviously, the ticket side of the fund is probably not sufficient to create a stimulus program for the country, and if we want to play a diversified allocation, it doesn't mean that the whole billion will go into a grant or stimulus program, because you would need to diversify and deploy and reach the strategy that you have for the fund. But having said that, we still want to have a role in this, like what we do in the whole of Dubai Future Foundation, where we have converted all our projects to become COVID driven right now through the reports in the business unit 1, or through the accelerators, which have been connecting with startups to solve for ventilators and masks, 3D printed masks. So we're doing all those programs to be very COVID driven. And to answer your question, allocation is there, governance is there, probably maybe getting the executive team on board and finalizing the asset allocation strategy and fine tuning it. But the plan is to start deploying this year. Okay, and on the venture debt? Yes, on the so the venture debt again. I think the best vehicle that comes to my head when you talk venture debt at the moment is probably the Mohammed bin Rashid Innovation Fund. They have a mechanism, obviously, of debt. We are in discussion with them at the moment to see what kind of initiatives are there to accelerate that effort, specifically in the times that it is much needed currently in the ecosystem. So on that point, I would love to also know the feedback of entrepreneurs on how that service offering is contributing towards them. We'll be sharing an article actually later today based on a survey on feedback from the ecosystem. So I'll be happy to share that with you. Look, Khalfan, when we go to the operational side of things and the practicalities of startups, I know you were mentioning, yes, you want to support the startup founders, but ultimately there's also the employees and the fact that we're working from home. If we take a scenario, for instance, that none of us are going to be going to an office anytime soon or in 2020, and yet all of us may be operating in TCOM, in DIFC, in DTEC, and the MCC. Are we seeing more coordinated efforts to support growth tech startups that don't necessarily need to be in offices when it comes to license renewals, visas, and more than anything else, real estate? I mean, we're all paying for offices right now because our visas are allocated to the real estate, and yet none of us are actually in these offices. Number one, are you aware of any policies or initiatives that will be helping to try and address this? And secondly, to tie it to the Dubai Future District, is this an opportunity to try and encourage startups that meet certain criteria to not have to have the restrictions that SMEs or alternative entities have, to remove the restrictions and make it easier for us to operate at a faster pace? Philip, I think this is an excellent question, and this drives to the new normal post-COVID-19. I think this, and I'll come back to this specific point, but obviously when people say, when are we going to get back to normal life? When are we going to be going out? The new life will no longer be like it used to be. And we need to accept that. I mean, things will change as a normal, as a practice, things will change. Inshallah, we'll all be out as soon as possible. Obviously, there's two big challenges, and I don't want to go through the COVID-19 discussion. That's not our point, but it's either herd immunity and everyone's immune in the fastest way possible, or it's the vaccine, which is going to take a longer period of time. But prior to that, it wouldn't be as normal as we want it to be, if this is the best way to say it. Remind me, what was your question again? So the question is, we know that Dubai is set up in a way that you have to have a real estate that gives you X number of visas. The real estate is then associated with the license.
I have yet to see too many meaningful initiatives that come out from the free zones.
Yes.
So one, is there a coordinated effort between free zones to support? And then secondly, trying to take the opportunity, if we're all working from home, to de-link the real estate and the office space to the visa allocation.
Yes, exactly. I mean, and again, great question. I think this is inevitable, Philip, and I think adaptation is key, and this is how leadership push us here. If you look at any, and the reason I mentioned the new normal is, and now I remember the link between my introduction and your question, is if you look at malls, for example, we know that retail will change. We know that spaces in malls will change because of the introduction of e-commerce that got extremely accelerated due to COVID-19. We knew that e-commerce is inevitable, but now it got accelerated, and this will change even in the physical space of malls. They'll probably be more experiential. Like I always say, whenever I go to a mall right now, even if I go to a specific brand, you'd go there, you'll try out the stuff, but then you'll end up buying from them online. They will end up benefiting, but you wouldn't be walking around carrying bags. And so the idea that this will change when it comes to, and we need to adapt. So my point is, with office space and entrepreneurs and the need for that and work for home, I believe it's inevitable for us all to adapt, including us at Dubai Future Foundation and government entity, not only startups. I believe we need to revisit the amount of real estate we need. And the purpose of this real estate is extremely important. Do we really need offices post-COVID-19? I mean, dedicated offices? Or will the office space be dedicated for gatherings that create creativity, and we sit together and we interact and we mingle and we come up with solutions? Will this be the risk? Does this mean that our real estate will reduce? I think the discussion at an entrepreneurial side to reduce their costs and increase their value will definitely be discussed at the highest level, because you mentioned talent in the beginning, and the most important asset you have is the talent, and you want to make it as easy for talent to thrive. And if they can produce as much, if not more, from home, then I think repurposing the real estate for other reasons, for other valuable reasons that will always be there, showcasing, like I said, the casual meetings. But if this is something that's beneficial, I do not see any reason why it would not be discussed. It's part of the report that we've also circulated. And I'm very confident that things that are valuable for the entrepreneur are a learning curve for us. And I think the impact of the importance of those challenges have been more visual in challenging times like COVID-19. So the short answer after this explanation is definitely something that I forecast to be under consideration for entrepreneurs.
And as I think I stressed to you in the meeting now, is no better a time to try and cut through some hereditary, historical kind of developments in the infrastructure of Dubai to be able to change these things. No better time than now. Before I start taking some questions from people in the group, in terms of the Dubai Future District, I mean, it was announced there were plans to bring together DIFC, Emirates Towers, Dubai World Trade Center. I mean, what's the vision there? Again, given that maybe there's a slowdown now, we can use it either to accelerate and move people there remotely until people can start moving there physically. But what's the vision of this district and the vision for Dubai in creating such a... DTEC exists, you've got TCOM. What's the vision of this particular jurisdiction to support startups? And if people are interested in it, how do they get more information? Okay,
I'll start with the last question because it's the easiest. So, interested in it, obviously, to connect with us through the Dubai Future Foundation, and we will emphasize on this, the champ that we talked about in the report, to also be responsible for those kind of offerings. So this is that when it comes to reaching out and understanding and more about the Dubai Future District. Now, when it comes to the physical connectivity, it's still something that's underway. We've looked at different designs and different schemes of how it's going to be physically connected. The beauty about this, and shows the vision of leadership, is that those It shows how those three strategic projects have been strategically located next to each other. I think there's so much leverage that we can make use of at Dubai World Trade Center and the events happening in there, tech and non-tech driven, and the footfall that will happen between the connection between us. The IFC, like I said, have been active, and you've known through their accelerators and the fund that they had that was predominantly fintech driven, that as the discussions we're having with them will be rolled over as a component of the DFD billion dirham fund. So a lot of synergies in the mindset between the leadership of the three entities and also in the actual offerings that we have.
Okay, I'm going to start taking some questions here, and I'm trying to read them and vet them as I go along. There's a question here, which is actually not tech related, but it's a startup related one. It says retail small businesses located in malls are locked in long-term leases with developers that they can get that they can't get out of. And in all honesty, that applies to tech companies as well. We're in leases and we're unable to necessarily get out of them easily. Are there any plans for the government to support SMEs who need to shut down by allowing them to exit leases without the liability or penalties or for the remainder of their lease periods?
Okay, so I mean, the amazing thing about this is, as we speak, Philip, we keep on getting those new offerings and ideas. And literally, I'm not sure if you've seen the stimulus package that came out today. I think there was a news on a stimulus package from the Ministry of Economy in the north of 200 billion, and it also mentions focusing on tech-driven, let's say, businesses. And I tried to reach out to the Ministry of Economy, and my team is having a dialogue with them. This is very fresh news. It just came out today. So again, when it comes to real estate, when it comes to retail, it's challenging for everyone. It's challenging for the tenant. It's challenging for the landlord. They're all facing different challenges. But I'm confident that I mean there are solutions that are being worked on, but it's something that should be a win-win situation for everyone. If we're talking about the private sector and their contribution, they look at their portfolio on a net basis and what it impacts them and how much they can be friendly with their rental policies in comparison to government entities, which probably will be in a more, let's say, flexible situation to handle those kind of conditions. So different scenarios, but I'm sure there are solutions that are being worked out in both areas.
Hamza is asking a question which I kind of touched on, but what about attracting and retaining talent in the country? Are there any new steps being taken or discussed to avoid mass exodus that many publications, local and international, are talking about? I mean, the FT alone have written 2 articles in the last 2 days. Bloomberg wrote an article. I mean, one of the major concerns is, and it goes back to my question of, there are some tech companies who are actually thriving, or at least getting increased demand in the current environment and are looking to hire. And yet there are still issues with hiring and getting people into jobs. Are there any initiatives or steps that you're aware of to try and avoid this mass exodus?
So we are working at the Dubai Future Foundation on a plan that's very aligned to what kind of solutions and synergies can we create through the network of Business Unit 4 at the Dubai Future Foundation, which aggregates all the startups and entrepreneurs through accelerators and incubators in the country, to see which ones of them are growing and which ones of them are struggling, and how can we create a program that connects entrepreneurs with the new career opportunities in their business. So I think the answer for this is it's a work in progress that we're trying to understand a bit more, and we're more than welcome at the Dubai Future Foundation to have that dialogue to explore how we can develop that program.
Jack is asking an interesting question, which I touched on yesterday when I spoke to you. Any tips for startups that are looking to come and set up in Dubai now? I mean, there was a freeze on issuance of visas. I don't know whether there was a freeze of licensing issuances now. They were part of the DFA, they say, and they had 2 MOUs and they wanted to come to Dubai, but everything kind of shut down. Are there any kind of initiatives, or can you give any guidance for companies that are looking to use this time to maybe get the paperwork done and get the establishment done so that they can actually be up and running when this perhaps gets into a better situation?
Absolutely. So I think from a registration and up and running perspective, it'll be good to have a conversation with Area 2071, which is part of the Future Foundation, which is working on the best ways to, especially that those startups are part of the DFF family anyways, and they're alumni of the DFA, which we're happy to hear. But we hope for them to also go beyond the MOU stage and actually sign pilot projects and actually grow their businesses and revenues. And it's very important for us to track where our alumni have reached. I think the first suggestion I'd say is, since they're in touch with DFA, is to communicate with them on those specific requirements. Obviously, and I'm not sure how much you're aware of this, Philip, but the trade licenses, registration fees, the trade licenses for 1,000 dirham with waived registration fees, and the waiver of the 1750 of the establishment card fees in the Area 2071 offering, and how appealing is that to entrepreneurs. If you're unaware of them, I also urge startup to communicate with the DFA team and Area 2071 to understand what kind of fee reductions and offerings are they offering at the DFF level and at an Area 2071 level. Just for everyone, Area 2071 is the ecosystem of the Dubai Future Foundation. So if you can
on this one point, Khalfan, when you get a trade license with Area 2071, which free zone is it that you're going to get a
TCOM?
It's a TCOM. Okay, it's a TCOM license. Yes, fine.
It's a TCOM license. Yes. So I think, and the TCOM has been extremely supportive with that. So I think if you haven't explored this, Philip, and maybe the rest of the attendees, please feel free to do so, and also open that dialogue on how establishment can be done on an online basis, because obviously it's not in our hand to decide when people can physically come back to the country. This is health related and this is border driven. So that's a completely different story.
And there's a question here. So somebody's asking a question, I'll just answer it myself. Can you get a copy of the startup white paper? I will send a copy of the link to the startup white paper in the follow-up email after this call so that everybody has a copy of it. And Khalfan, I'll have a conversation with you separately to see how we can consolidate, maybe on MAGNiTT, the initiatives that are happening from Dubai so that we can help you be the champion with the different waivers and the different fees for Dubai, at least so people have visibility.
I'm being nosy and I'm looking at the Q&A as well and chats, and I see, I don't know if Jack is the owner. If that's you, we wish you the best. If you're a
It was Jack. It was Jack.
It was
so
Jack.
There's a question here, which I think is an interesting one, and I don't know whether you can answer it, but it's free zones. I remember about 12 to 18 months ago said that they would release and return promised visa bank guarantees, i.e. the deposits for all of the visa issuances. And yet they haven't done so. And yet for many companies that could act as extremely important cash flow. Is there any visibility on whether that will actually be activated for startups or for all SMEs registered?
So I've heard that announcement as well. And I think the best way to chase on this is through the communication that we are trying to build through this. We call it, I know in the report we call it the startup champ, but we're calling it the IDE office, the Innovation Driven Enterprise Office, which defines the difference between a typical SME and an IDE. So I think through that channel, it will be a great way for us to chase what has been achieved and what has not. And as anyways, the idea of free zones since the inception of free zones, as you know, Philip, has been evolving. Free zones had a specific reason when it first has been set up. Now maybe the value is changing and evolving on how the free zone can be an offering. There's also the 100% ownership specific LLCs onshore. So the idea of free zones is evolving, and we need more of those ideas, and also what has been not done from the things that have been announced. It'll be good to understand so we can follow up on them.
And I think, look, I mean, there's quite a few comments around this, and I think this is one of the takeaways that we can definitely take away, which we mentioned in the committee. What is the single source of truth for new policies and assistance to startups and SMEs alike? Who do we turn to? There's a lot of kind of lack of visibility, or where do people turn to for help and guidance when it comes specifically to startups in this space? And I think that there's a definite space for DFF and the space that you're in to be able to articulate that. Yamin is asking a question: could it be DFF? Could it be for DFF to create a salary fund similar to the UK, and I believe they even have that in the US, to furlough staff but refrain from permanently dismissing them, where they can take up some of the costs in the temporary period? Is that something that is being explored and discussed?
I think this goes a bit beyond DFF's mandate, but DFF can contribute to it. This is more of a local, if not federal, effort, in my opinion. Because simply it's a size matter thing, but definitely I've looked at the models that have been done in UK and Europe, and it's something that is discussed and is being discussed. But to answer the question, is DFF can contribute to it? Yeah, is through the fund that we have, probably no, but from the contribution to it, then yes.
Interesting question here from Ramsey. Most startups are looking to pivot and innovate to offer new solutions to cater for this new reality and to survive. How can someone like DFF support such startups to showcase these new innovations and solutions to the ecosystem?
It's a very interesting question, and we're working on a program that's more of an accelerator program for startups that have pivoted and came up with new ideas. And how we can support them basically through the program and linking them up with different government entities. We've realized the value of this program through aggregating all our entrepreneurs in the business unit or business unit 4, which has a massive network of startups. When COVID first started, all we did is we communicated with all the startups and tried to understand how they can contribute to this challenge. So I think focusing on the ones that are pivoting right now is extremely important, and this is a pivot of an idea that we had as well, and pivoted because we had a space in Area 2071 that we were focusing on startups that have actually failed, and we wanted to celebrate their failure, because at the end of the day, all entrepreneurs know that this failure is a learning curve for them to pivot. So I think this is the right time right now, because the pivot rate has probably increased in those current times. So we need to leverage on the talent, because like we always say in the entrepreneurial world, the asset is the person and not the idea. The idea can always change. So it's a great comment, and we are actually working on that. And I know I'll keep on stressing on the Dubai Future Foundation's IDE office, but I think, like I said, this is a two-way conversation. We tell you what we do, and we'd love to know what you guys see valuable, and come up with action items that are tangible. So hopefully after this discussion, this will not only be a talk, but also accompanied by action items.
Jeremy from ENY mentions that health tech is currently one of the more attractive venture asset classes during the COVID-19 era, yet it's lagging in the region with regards to venture capital investments. Is there any discussion to kind of drive an incubator or partnership between, or support, or a venture fund for healthcare startups to help them collaborate with insurance companies and different authorities to support them in this growth or pivot period?
Okay, a great question. Again, I'm not quite sure if the question or the gentleman or the lady that had asked the question is aware of the Dubai Future Accelerators and the Dubai Health Authority's involvement in the process of assessing startups and entrepreneurs that are focusing on health and innovative ideas. The idea why we got the government entity involved in this process is sometimes with health-related startups, it takes more time, it's more patient capital, it takes, so for typical venture capitals and investors, it might be less appealing in comparison to consumer tech, specifically in an emerging region when it comes to venture capital. So my suggestion is to funnel those ideas through the Dubai Future Accelerator in partnership with the Dubai Health Authority, because we need the government entity that vets those ideas and help them grow in the region. And I'm not sure how much the person that asked the question knows about the value of the Dubai Future Accelerators, but in a nutshell, the hope of this program is to give a contract to startups and to become more inclusive when it comes to procurement. So the light at the end of the tunnel from this program is not only potentially receiving VC financing if the right investor was there, but actually to get a contract awarded from the government, which becomes a revenue base for the startup, which appreciates its value, which attracts more VC. And it gets validation and vetting from the subject matter expert, which is the Dubai Health Authority. So if he hasn't or she hasn't seen that or visited that website, if you will, then I'd urge them to do so, and we're more than happy to connect them.
I don't want to take too much more of your time. I'll answer just one or two final questions. I think there's two that are wrapped around the same thing. One just specifically says, is the UAE looking to support SMEs by providing long-term, low-interest loans to allow SMEs to get out of the current financial crisis? And one that's linked to that, Kareem asked the question, how about simplifying the process of getting these capital loans? He notes that MBRIF is, as far as he can tell, a 3 to 6 month cycle process to potentially getting the funds. Is there any way of expediting this process if that is a mechanism by which you can get these loans?
Okay, I'm smiling because this is a discussion that I had at the board yesterday. I'm a board member in the Emirates Development Bank, which kind of oversees the MBRIF as an operator model. MBRIF obviously is an initiative of the Ministry of Finance. And we had a discussion with leadership, and they agree that in the current situations, speed is more of an essence. Let alone the typical burn rates of a startup in normal circumstances where speed is of an essence. Right now, speed is even more of an essence where we have an urgent situation happening. I think this is quite visible to leadership at MBRIF. They have the venture debt mechanism. And if you I mean, just the name of the fund gives you the importance of this. It's called Sanduq Mohammed bin Rashid al-Ibtikar. It has our leaders behind it, and it has a purpose, which is innovation. So leadership there are taking this seriously, and I'm sure it can serve as a great vehicle for serving the purpose that we have at the moment.
I'll just ask you two last questions. One, because
I lost you, Philip. I don't think I can hear you.
Can you hear me? Can you hear me? I will turn off my headset.
Can you hear me?
Can you hear me?
Now I can hear you. Okay.
Two more questions, but just to close it out. One, Isa is asking, when is the Future Museum opening?
Okay. So the Museum of the Future, obviously, we're all excited for it to be open. There are larger, unfortunately, events that had to be postponed. Expo, as we know, the Olympics, the Euros. I'm not sure how much you follow football, Philip, but we're extremely gutted that there's no football this summer. And
the UFC is back.
The UFC is back, but I'm not quite sure how it goes or it went without any fans. And I don't want to go into a football topic because this will be another hour, but even with sports, you need the fans in there. But I take any sport, anytime at the moment, even without fans, because we just don't have it. But yeah, the museum, obviously, we're looking at the best time to open. Most probably looking at the current conditions, we were supposed to open end of this year. We will probably slightly push that and take it on a month-to-month basis to understand when is the best time. But again, the most priority for us is the health of everyone. And bear in mind, the museum, we're also looking at how we can manage the content at the moment, because post-COVID time is different. The experience in the museum can be different when it comes to the spacings between people, the interactivity with technology, which plays a key role in the future. Is there a touch or no touch post-COVID? So we're assessing all those situations. All I can tell you is that it's an amazing, immersive experience. And one thing that people don't tend to realize is a typical museum, not to undervalue a typical museum, but a typical museum has assets and displays that appreciate in value with time. So if you look at the Louvre, as amazing as it is, whatever they invest in is valued X and is valued 10X in a short period of time. When you look at a future museum, it's completely the opposite. Whatever is valued X is valued 0 shortly, because technology and the future evolves, and you need to stay future relevant. So we need to be smart with our logistics and how we continuously change the content. But all I can tell you, it's an amazing immersive experience that I won't disclose much to keep it as an excitement as soon as it opens, inshallah.
Perfect. And just one last one, which I think came in through, but I think is very important, especially given the current environment. Startups, entrepreneurs are not expected to assume disproportionate risks to their already huge investments. Is there any updates on bankruptcy law in the UAE for companies that are potentially having to shut down?
Okay, so I'm not quite sure how aware is the person asking a question about the recent or not recent, maybe last year bankruptcy laws that were entrepreneurial friendly. If that is not the case, then potentially we'd love to have the discussion on what are the laws and policies that will make it more friendly for entrepreneurs. But I mean, we see that point, and believe me, I get it. And I understand that if an entrepreneur, specifically in the venture capital world and in the entrepreneurial world, has the fear of failing and being chased because of for debt or for other reasons, because he's being bankrupt, this kills the passion of drive and entrepreneurial DNA in those individuals. And leadership is aware of this, and they're creating the right environment when it comes to bankruptcy law, specifically for innovation-driven enterprises, as we said, in comparison to SMEs, which don't have any collaterals and their growth multiples are extremely higher and their ambitions are higher, but the risk is higher as well, which means that the likelihood of them failing and being bankrupt is also higher. So we need to give them kind of a safety net in order for them to thrive to the sky.
Khalfan, thank you very much. As always, it's a pleasure. Thank you for answering the questions. I try not to be too tough, but I'm trying to get answers for people that are asking them. As promised, we'll share all the questions, all the chat, anything that was shared, so that you have full transparency of what it is that people are asking from us, you, what people would like. For me, the key takeaway is that there's still a need for a focal point for all of us to be able to look towards for answers. And I genuinely believe that you are a champion of that, and your institution can very much help with that. But again, thank you very much for coming on and answering the questions. And we hope to see you soon in person. And I hope to come and see you at Area 2071 sometime soon. But thank you very much for your time, and I really appreciate it during this very busy period.
Thank you very much. First of all, I'd like to thank everyone that has joined us today, Philip, and rest assured that this is a learning curve for us all. I mean, and there's many initiatives that are happening, and we're probably pushing for initiatives, and we will make mistakes from our end as well. But the idea is to listen as much as we can and to understand. And believe me, I have some mystery shoppers or mystery participants here today with us in the session from the Dubai Future Foundation, listening and taking notes. Hence, I really urged on the fact that we actually listen to the audience as well. So we cannot appreciate what you have said more, and we will put things that will bring value to entrepreneurs and to the ecosystem into action, and inshallah value will be seen. And lastly, Philip, thank you so much for your continuous passion. We need more people like you that ask tough questions and are on the ground all the time and providing us with amazing insights on the ecosystem, because with those data points, our decisions are much easier and spot on. So thanks as always.
Thank you very much, sir. And I hope to see you soon. Take care.
Thank you, inshallah.
Ramadan Kareem, and take care.
Thank you, sir. Thank you very much.
Bye-bye.